Right, Nikki, I'm going to come out and just ask what I think is a question that people have a lot of misconception about. But what is the difference between auditing and accounting?
Good question. Yeah, that is something that frequently gets confused. So many times I've had people say to me, oh yes, my auditor, and I've got my audited accounts. And then you go and look, they don't have audited accounts at all. So let me tell you exactly what the difference is, Kirsty. So if you have your accountant do your accounts, prepare your accounts, what they are doing is they are from your base records. So assuming that you're doing your own bookkeeping, sometimes the accountant might do that as well, but assuming that you are producing your base records, putting together your bookkeeping, what the accountant will do is put it together in the correct statutory format so that they will make sure that the reports are in the right areas. So for example, check to make sure that, say, for your advertising, things are in the correct marketing line, they haven't been put in stationery, for example. So they will do some basic checks like that, make sure things are will make sure that costs or sales are in the right categories. They will make sure that the accounts reconcile, so there's no obvious mistakes. But what they're doing in summary is they're putting it together in the correct statutory format and making sure that you are disclosing the correct things as per the financial reporting standard that you're reporting against. Now, auditors, they're not there to put together your accounts. What they're doing is they are a checking process of your accounts. So what they're doing is they're understanding the processes that you are following within your business to put those accounts together. So they're making sure that there is a acceptable, auditable standard process for each thing. They will also understand where the potential risks are within your business, whether it's a process or the type of risk. They will also do some testing. So what they're doing is that they aren't doing forensic accounting. So they aren't looking at every single transaction in your business. But what they will have done through your risk profile, they will have looked at what are the most likely accounts that could potentially have some risk in, and then they will do some testing within those accounts. So for example, when they do the stock take, they will select certain products and look at, compared to your stock take, go and actually physically count against the stock take to check on certain products, have you actually got that number compared to what you reported? And they will do things like that. So it's a much more a checking process, is to give a surety to your stakeholders, whether it's your shareholders or your lending bank or your investors, etc. To make sure that they have some comfort that there are correct processes being followed, etc., and looking at what risks there are in the business.
Okay, that's fantastic. So just on secondary question is, can my accounting firm do my auditing, or do I have to go to an auditing specialist?
Okay, so some accounting firms are also auditors. So what you aren't allowed to do, however, is the auditor is not allowed to audit what it has produced itself. So what you will find is generally the answer is no. However, you may find that some firms are structured so their audit team is actually a separate company and a separate group of people to the accountants team. So they're used to working together, but they've got very clear distinctions between what their roles and responsibilities are, so that they are able to audit the accountants firm's work.